Hey guys, I forgot I was on. But hey, what's going on? Give me a moment. I know it takes a while for y'all to get on anyway, but I joined a whole lot of groups this week and I just want to make sure everybody can see that I'm on. Plus, as you can see, is me right now. I don't know if Sean's getting on or not. He should be getting on. Uh, okay, so he just told me he can't get on. So it's all good. I'll take over for Sean's part today. Give me a second. Okay, cool. All right. So let me let everybody know that I'm on. Just rock out with me. Oh, let me take my gum out. Let me take my gum out. All right. It's cool because I actually have a couple of things that I want to talk about with y'all. Anyway, I want to bring it up to Sean. So when Sean comes on next time, I'll bring it up to him so he can give us input as a mortgage broker. Just so that we're clear, I am not a mortgage lender. I'm a credit repair expert. I'm going to do my formal intro in a few seconds, but just rock out with me. I just want to let all the groups know that we're live and I got a couple of groups, so just bear with me. But anyway, if you have any questions, have any comments, just uh what am I going to say? Just leave a comment in the what you call it in the comment section. Please understand whatever platform you're watching me on, I am not on that platform. We are actually recording from StreamYard. So if you want to say something, leave a comment and show your name, just get on StreamYard. Let me just let people know that I am on. Okay, so Instagram is giving me a hard time as usual. Yeah. But thank you for having me on. Thank you for your patience. But I have to do this every time I go live because so many platforms, I'm connected to so many platforms. So I just have to remind people, hey, we're live. We're live. We're live. Mm-mm. Public. Okay. Let me get back on StreamYard. Hey. There goes my moderator. Thank you, MWD. Yes, just let everybody know. Just I have to do this. Usually I take the first, I know we're 5 minutes in, 6 minutes in, but I usually take the first few minutes because it takes a while for everybody to get in. But I do take this time to let all the groups know that I'm live so they can check me out. Thank you. This is the best moderator ever in my whole life. Thank you. Yeah, so hold on. Let me copy. Go over here. Hmm. Okay. So we are going to be live right now on Instagram. So we're officially live. Thank you guys, those that are coming in, trickling in. Thank you, thank you, thank you. Just have a patience with me. I'm letting everybody know all the new groups that I participated in, all the groups and the people that connect me. I got a whole bunch of new followers now, yeah. Like since last week. Like real talk. And I know you guys were expecting Sean. I apologize. He at the last minute he told me that he wasn't going to make it, which is all good. This is usually his show, so to speak, and I'm hosting, but I got y'all because I found out some information that was concerning as far as the mortgage world is concerned. I'm going to share that with you guys. When Sean comes on next week, I'll bring it up. I'll ask him to address it. If you guys have any questions or concerns, just definitely get at me. But give me about 60 more seconds, I guess. Let me just let everybody know once again that I am live so they can join. But it looks like for the most part, y'all got the message that I'm live. All right. Yeah. Hold on. You know what? I'm not even going to do it. Okay, cool. Hey, what's up, everybody? Let me do my formal introduction. Hi, this is Tamaya Robles. I am your credit repair expert. I am your credit repair specialist. I am the host of this podcast, Coast to Coast Credit. Welcome, welcome. I am the owner of Fix My Credit Now, 850.com. What's good, everybody? So, usually this is my weekly Sunday segment where it's called, as you can see, Ask Mortgage Loan Officer Sean Rogers. However, he's not joining us today, but he'll probably be here next week. Sean is always consistent, but this is his segment. I will still leave his information on the bottom. So if you need a mortgage lender, he's a beast. Check out our other lives too, as well. So, what I'm going to talk about today is I'm supposed to be doing weekly lives anyway to update y'all, so I'll kind of use that as a filler. But there's a lot of changes that I've been hearing lately within the credit world, um, just the financial world, period. But one of the things that, as far as mortgages are concerned, that is concerning me that we will talk to Sean about next week. But when you're trying to apply for a mortgage now, they're not just going by FICO Classic, FICO 4, FICO 5, all that or whatever. They're now going towards FICO 10 and FICO 10T. And I wanted to share that with you guys before I get into what FICO 10 and FICO 10T is. Basically, in a nutshell, the sweetest way I can say it is it's the beginning of the end of credit repair, as far as I'm concerned. Not credit repair, but in a nutshell, every 5 years, your credit, we get a new credit model. So, you might be used to FICO 6, FICO 8, FICO 9. Technically, we should be at a FICO 10, and it comes out every 5 years. FICO 10 and FICO 10T actually came early. It came during the second part of the pandemic, low key. I peeped that. I saw what it was doing to people's scores. If you want to know more, just go on my YouTube channel. I have a whole bunch of videos where I'm talking about the FICO scores, what they mean, so on and so forth. So just go check it out. But I did talk about whether or not this new scoring model will affect mortgages, whether or not you're approved. Because when you apply for a mortgage, they run your credit, right? But for years upon years, they've been using FICO Classic, FICO 4, right? FICO, is it FICO 4, FICO 5 Classic, just the older versions of FICO to get you, see if you're approved, to check your credit. When FICO 10 and FICO 10T came out, mind you, FICO 10T and FICO 10 are the only scoring models that have two versions of themselves, which is very also concerning, right? FICO 10T goes back 2 years and it judges you, and you get your credit score based off of how your credit was 2 years ago, which is a major fucking problem. And we talked about that. Go check out my videos. But anywho, I told y'all back then, like, hey, you don't have to worry about it. I read up on, what is it, Fannie Mae and Freddie Mac, and they did a disclaimer stating that they are aware that the new FICO scoring models were coming out, but it had no effect on the mortgages, and that they weren't going to even enforce this new scoring model until 5 years later, and they would leave that up to the mortgage lender. I just saw, and I'm gonna share this with y'all right now. I just saw an article that says something completely different, and it's concerning. It's not concerning me per se as an individual, as a personal consumer, because I'm not trying to purchase a home. I already have my home, right? However, the majority of my clients are trying to purchase a home. The majority of, I want to say like a strong, like 80% of my clients are trying to buy a home. They have a lender, and if they don't have a lender, I send them over to Sean. I trust Sean. Or if they are in a state that Sean doesn't cover, then I send them over to my other lenders, so on and so forth, right? And from what I was told, even through them, we ain't got to worry about a FICO 10, a FICO 10T. It's no big deal. Now, as you can see, hopefully you guys can see the screen. I'm not going to read this whole long ass article for you, but basically, per this company, Certified Credit, you can check out the website, certifiedcredit.com. New changes coming to credit scoring models, credit reporting, right? New changes coming. they're stating that now there's changes. It says as of 2022, I'll read a little bit of it. I promise you I'm not reading this whole article. Go check it out for yourself. I will bring up the highlights. This is how long the article is. But what they're saying is now they're going to start using this model, this FICO 10T model, and that's concerning. That is concerning. The best way I can explain the FICO 10T metaphorically is it's called T is supposed to be trending, so it's supposed to be trending data, meaning they see how you've been spending, how you've been paying your bills on time or not, how you're paying your credit cards, whatever. They're tracking that, you know. That's what they said initially. And we could get into it and I'll show you again what FICO 10T does to your credit score. All right. But I want you to see that they're saying now this is going to affect you. And more metaphorically, it's like a lot of clients, you come to me because you want your credit repair, you're trying to fix your credit. Some people are fixing their own credit, right? Boom. Now you're fixing your credit today. And maybe a year and a half, you're at, I don't know, a 750, 800, right? Boom. Now you decide that you want to go purchase a home. Now they're stating, well, sure, you can still purchase a home. Let's check your FICO 10T out. FICO 10T is going to see how you were 2 years ago when you were a 400, a 420, a 500, right? So they're judging you on your past. Like that's back in the day. You know, you might have been a player. You might have had a bunch of chicks. You might have had a bunch of dudes. You know what I'm saying? Like, and now you're a Christian and you want to settle down and have kids and have that white picket fence. But people are like, I remember you used to be a player. And they just talk to you like you're this player, like not the grown, developed person you are today. That's what FICO 10T is doing to you, to us, to all of us, right? So, in a nutshell, it says if you haven't heard already, big changes are coming to the credit reporting space. Now, this article was written March 13th, 2024. Okay. And I'm saying that in particular because I don't want you to think I'm reading an old article. On October 24th, 2022, the Federal Housing Finance Agency, FHFA, announced the conventional mortgages will soon use 2 new credit scoring models and bi-merge credit reports. So, okay, so they're saying conventional mortgage. And as we know, there's other mortgages that you can get. It doesn't have to be conventional, but they're specifically talking about conventional mortgages. This announcement has naturally spurred many questions among the mortgage professionals, like how do the credit scoring models differ from FICO Classic? How will these changes impact borrowers' mortgage eligibility? And when will these changes take effect? Okay, very good questions. So again, even though I'm not a mortgage lender, I can tell you and literally show you what a FICO 10 score will do to your credit, score. Okay, I'm gonna show you. I'm gonna give you an example. Some of y'all know, if you've been following me for a while, I have a lot of clients that are completely okay with me sharing their credit report, their scores, and whatever I've done because they know I teach and I'm going to share this and I have a podcast like now. So I'll show you one of my clients, her FICO, and I'm going to show you how she used to be in the 800s and where she's at now, thanks to FICO 10 and FICO 10T. And then I will give you some suggestions, some solutions, because it's not that you should panic. It's more so just be aware, prepare yourself, and ask the right questions. All right. So these are the table of contents. So I'm going to skip over to like what's most important. What are the new credit score models? And that's basically, they're talking about the FICO 10T. Now, if you have, let's say, Credit Karma or Smart Credit, Identity IQ, Credit Sesame, they don't go by FICO 10. I'm saying they don't go by FICO. These are Vantage scores. So the Vantage is FICO's competitor. It's their first competitor. What they do is they buy your FICO score and then they do their own calculations and then they give you a credit score. So if you're looking at Credit Karma and you're like judging what your credit worthiness is per Credit Karma, you lost. I'm gonna tell you right now, like you lost as soon as you logged in, right? because the majority of, let's say, of these companies and these lenders do not use Vantage, they use FICO. However, since they have been released, they've been gaining traction. A lot of rental companies use Vantage Score, among other models, but for the most part, everybody uses FICO, especially when it comes to mortgages. Vantage is cheaper than FICO, and that's another reason why some companies use it. So Vantage has always been typically 3.0. That's where we're at now. Matter of fact, I can pull up a credit report, a Credit Karma, just for shits and giggles, so you guys can take a look at it. I'm gonna pull it up now. I just want to make sure that personal information is blocked, just so you have an idea of what I'm talking about. Hold on, uno momento, por favor. All right, is loading. Okay, cool. Boom. All right. So this is a client that that I recently worked with, okay, and worked on their credit. As you can see here, it says scores calculated using Vantage Score. Okay. That I'm just trying to be claro, just so you're clear and understanding. But as you can see, their Vantage Score is 3.0. And this may not seem important to you guys, but you have to absorb it. It's mad important. So when you're trying to apply or preparing to apply for a mortgage, or you're thinking about a mortgage, don't look at the Vantage Score. Mortgage lenders are not looking at Vantage. They're looking at FICO. FICO, not Vantage. Okay, now let's get back to the basics. So the equivalent of a FICO 10T is Vantage is a 4.0. Now, a lot of the platforms have not reached a 4.0 just yet, and a lot of companies have not incorporated FICO 10T just yet. And I will show y'all in a minute with a live FICO credit score, a credit report. You can see live. I can break down to y'all again. And if you want, just look at my past videos. I break it down to the T. The difference between FICO Vantage and blah blah blah, FICO 10, FICO 10T, whatever, right? But that's the new scoring. So the scoring model, okay, FICO 10 and FICO 10T, my Vantage 4.0. So it says these credit scoring models stand out from FICO Classic for their, and then they're saying implementation of alternative credit data, trending data. Like I stated, that's what the T stands for. What are the differences of these new credit score models? We'll get into that in a second, and that's where I'll show you a live, credit report, but FICO. What are the new credit score requirements? You can read through all of this. What I'm concerned about is the mortgage aspect. So let's get to this. How can these changes benefit mortgage applicants? So it says the new credit scoring model and credit score requirements have the potential to make home ownership more accessible for previously underserved markets. I find that to be bullshit, but whatever, because they, one, expand access to credit to people with limited credit histories, since lenders can now look at Vantage scores in addition to FICO scores. Borrowers with less than 6 months of reported credit history may be able to qualify for mortgages. Two, extend access to credit to people with strong alternative credit data. 26 million Americans don't have enough traditional credit data to generate a credit score. This may be because they're young or they've recently moved to the United States, blah, 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 yakety yak. Since the new credit scoring models take into account alternative credit data, meaning such as rent, utilities, telecom, payments, etc., they can give these otherwise credit invisible a chance to show up, blah blah blah. All right. I'm feeling bullshit. I'm sorry. I'm smelling it. I'm hearing it. I'm not feeling it, and I'm explaining why, but it sounds like a bunch of jibber jabber. But okay, cool. How can these changes benefit mortgage lenders? All right, so many borrowers can expect to gain from the FHFA's credit scoring changes, but what about mortgage lenders? Lenders can also look forward to impact credit reporting costs with the bi-merge credit report requirement. Mortgage lenders maybe always pay attention to the wording, like maybe, like it either it will or it won't. It can or it can't. It does or it doesn't. It's not maybe. There's no clear answer with maybe. Maybe means you're probably bullshitting me, but whatever. Maybe able to cut down on their credit reporting costs. Lenders can then pass on these cost savings to their borrowers and make their mortgages more affordable. However, in bold, lenders who continue pulling three credit scores, FICO 10, FICO 10T, Vantage 4.0, may actually find that their credit reporting cost goes up. So, I mean, I'm not reading this because we're all not lenders. Unless you are a lender watching me, what's up? You know what I'm saying? What's good? Let's be referral partners. But I'm talking to the consumer. I'm talking to those that are interested in purchasing a mortgage. So I'm going to skip over here. Now, are there any drawbacks to these changes? Let me see what more bullshit they're going to kick to us. Despite the potential benefits, there are some downsides that may arise from these changes. For example, the GSE decide, I don't know what that is, decide to use the lower of the two credit scores. This may negatively impact some borrowers, blah, blah, blah. I'm just hearing a bunch of bullshit. How can mortgage lenders share their feedback? When will these changes take place? So they're saying, let's see what it says. Da, 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 blah, 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 da, da, da. They're going to take effect in the first quarter of 2024. So we are in the first quarter, or we've surpassed the first quarter. February 29th, 2024, implementation timeline update after several months of gathering stakeholders, yada, yada. Da, 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 da. Okay, we need a mortgage lender on this. We need a mortgage lender because I'm solely going to look at this from a credit expert, from those eyes with those glasses on. I don't see a win here. If I did, I would have hopped all over this. I see something very harmful happening, and I'm going to explain in a minute. I'll give you a visual. Got you. Calm down. All right, new Fannie Mae partner playbook for credit score and credit reports initiative. Yeah, we're gonna need Sean to look at this and sign off on this. Okay. In the meantime, before I actually show y'all an actual credit report, let me just pause for the cause. I don't do this often. I need to, and I keep forgetting to. But hey, please be sure to like, comment, share, subscribe, download. Don't forget I'm on a podcast, Coast to Coast Credit Podcast, on all the major platforms. Definitely check that out. But anyway, my mod said FICO 10 penalizes past credit mistakes more harshly, making it harder to improve scores. It emphasizes trends, amplifies negative impacts. Yes, that all of that is true. I have, like I stated, I've done videos on this, and now I'm going to show you a live credit report on one of my clients. And again, this is not I'm doing it in this manner so it can block information as I'm logging in, and then I'm going to share it. But she's actually a client term friend. She's a cool ass friend, and she knows that I use her credit score a lot for educational purposes. And for some reason it is not showing. Okay, let me upgrade her for a second. You're going to see her first name, but you're not going to see her, what you call it, her I have to upgrade her plan so you can see all of her credit reports. But you're not going to see like her personal information. You'll just see her first name. Okay, boom. So let me share the screen with y'all. Okay. And it's going to be real. Like this is some real shit. This is a real concern. And I don't see this being a benefit for anyone. And I keep telling you guys to look at it this way. If we're being suppressed by the system, these credit agencies, right, or so-called credit bureaus, then if they're suppressing us and they're judging us with these credit scores, and they're the ones that it determines whether or not we're approved or denied for credit, and they're giving us information on how to better your credit or what's changing and so on and so forth. I'm less inclined to listen to them because you're the suppressor. You're our suppressor. If you had any if you had our interests at heart, we wouldn't have a credit score, right? Like we wouldn't be going through these things. We wouldn't have these unlawful, inaccurate, in accounts on our credit report, dropping our credit score. We won't be penalized every time we're trying to seek credit because we need help or some sort of assistance, or we're trying to purchase home or a car. And every time I ask or inquire, I get an inquiry and my score drops 3 points. Or I go to the car dealership and I'm applying for a car because I really need a car. I got kids, I got, to travel for work, so on and so forth. And every time I walk into a dealership, they have the right to run my credit through about 15, 20 banks at the same time, times that by 3. And that's how my score drops. So the next time I try to get a car, my score is already dropped from before, right? So they're saying, oh, this is how you can help. This is what's going on. This is what the new changes are. But at the same time, you're not really giving us a solution. You are the cause of our problems, right? Why would I listen to anything they have to say? Like, why? Why? Anywho, so currently we're on a FICO score 8. And if you're rocking out to Vantage score, we're at a Vantage score 3. Okay. We're on model 3. Now, I'm not going to talk about Vantage. I do deal with smart credit. I do look at Credit Karma only for certain things. So I'm only going to talk about FICO because when you're trying to purchase a home, your lender is only going to look at your FICO score. So we're going to talk about FICO and FICO only. So if you look at her credit report, now mind you, she got some things going on right now, and I already know why her score is the way it is. Like I said, this is my homegirl. We're good. So don't freak out over the fact that her score is low. Okay. I know what's going on and what we're trying to do. But right now, you see, this is a FICO score 8. We're currently at a FICO score 8. This is what's called your consumer score. This is like if you go to, I don't know, if you go to the mall, you go to JC Penney's and they're like, hey, you can get a store credit card, let us run your credit. And you're like, okay. And when they run your credit, they're looking at your score 8. The score 8 was released years ago. But it takes a long time for the companies to play catch up with the scoring models. So technically, we're on FICO 10 and FICO 10T, but it takes so long for everybody to play catch up that you don't even, a lot of companies don't even know what the hell a FICO 10 or a FICO 10T is. A lot of consumers don't. I do. Some of y'all do. And some companies use a FICO score 8. But right now, this is her FICO score 8, right? This is her average common credit score. Now, if you scroll down a little bit, and mind you, I'm on secure.myfico.com. Just go to myfico.com. If you want to see every nook and cranny of your credit report, you're going to have to pay for the 3 with the third plan, and you can get like everything and updates every month. But I'm paying for hers because I use hers a lot for educational purposes. But if you see here, you have the score versions by loan type. Okay, so if you're trying to get a mortgage, then you'll see this type of score. Auto loans, they have a certain type of score. Credit cards, certain type of score. And the new versions, which is the FICO 10 and FICO 10T. So since this is a mortgage episode, we're going to talk about mortgages. So if you click on mortgages, right, it says FICO score 5, 4, and 2. 5, 4, and 2. That is what is used. FICO 5, 4, and 2. And in certain cases, FICO Classic. Okay. So when you're applying for a mortgage, they're going to run your credit report and they're going to check these scores. So if she were to, hypothetically, if she were to go ahead and apply for a house right now, she would be denied. If I'm not mistaken, again, I'm not a mortgage lender, but you need at least a 650, I do believe, to get pre-approved for a mortgage. But these are the scores that they're looking at. Now, these are older scores and they're less forgiving, meaning if you see her credit score here, 516, 511, 550, and then you look at her consumer score, there's a noticeable difference in scores. It's higher. Okay. She has a higher credit score. I can show you someone else that has a higher credit score so you can, if you really want to see, but I just need you guys to see the huge difference. FICO score 8, and then the mortgage score. You're seeing a difference. It's lower. With a FICO score 8, you can have collections, you can have some charge-offs. Your consumer score is more forgiving. Your score can still go up even if you have collections, charge-offs, inquiries, and things like that. It's going to take a minute, but it will still go up. But with the mortgage score, it's less forgiving, meaning you can't have these negatives on your credit report. You see that? Serious delinquency. This is what's hurting her score. Recent mispayments, bad payment history, high credit utilization. Okay. Now, if we go back again, just to prove to you what they're saying, this is her utilization. She is 75%. Her utilization is 75%. You need to be at 15% utilization or less. So because that's 30%, which is a huge portion of her credit score, then because it's so high, her credit score is going to drop drastically. Okay. So if you want to quickly raise your score and you care about scores, drop your utilization to 15% or less. Now let's get back to here. So mortgage scores. This is where it's at right now. Now let's go to the new version that they're talking about. This is the FICO 10. See the FICO score 10, the FICO score 10T. Now they have the FICO auto score 10, the FICO bank card score 10. Now I promise you, don't start shaking in your boots just yet, because I'm telling you, a lot of companies did not play catch up yet. A lot of mortgage lenders did not play catch up yet. They're not using this yet. Okay. By the time they use this, we'll be on probably 2 more different versions, but they're saying it's available. It's saying that if they choose to use these models, they can. And let me show you what the difference is in her credit score now. Now we're looking at the new models, right? So she already had a low credit score, right? She went up 2 points. That's nothing, right? But 548, 531, 533, sort of in the middle of the 500s, right? But according to her FICO 10T, she's not even in the 500s, according to her TransUnion and her Experian. Okay, let's look at her FICO 10T. Same thing, for pretty much. It's not that much of a difference. It's still trash. Okay. Now, auto score, if you want to look at that, boom, it's just getting worse and worse. Worse and worse. And her bank card, but I'm trying to tell you, credit cards companies don't use FICO score 10. They can. It's an option, but on average, they don't. So don't freak out. Okay. So what this article is basically saying is now they can use a FICO score 10 and a 10T as of the end of the quarter for 2024. We're already at the end of the quarter. We're already there. We're going into the second quarter. Okay. So some people are using that. Let me take a pause for the cause. Let me see what my mind is saying. FICO 10 gonna be like Devo once implemented, it seems. Yeah, it's a beast, and I've been telling y'all. Right? Like, I'm one of those people that foresees things like mad early, but if I say something, everybody says, "Oh, you're crazy, you're crazy." I knew that this was going to be the beginning of the end of credit repair for about 5 years. I'm just trying to keep it a beam with you. Okay. When I became a credit repair expert, I was doing my thing. And then, like, I say 2 years in, I was like, wait a minute, I don't see this lasting very long. This credit repair, credit is always going to be there. Okay. They want you to be in debt. And and we'll do a whole other episode. I'll talk more on how you actually want to keep your debt. Right. If you guys can mentally deal with that. But what it seems like what's happening is a lot of people have their heads in their clouds and they're talking about, yeah, well, I'll just wait the 7 years and things are going to drop. No, that's not working anymore. And I need y'all to wake the fuck up. Okay. I need y'all to wake up, because these agencies, these government agencies, they're making these drastic changes to these mortgages, to you getting a car loan, for you to get business credit, for you to fix your credit. If you notice, a lot of people that were once credit repair experts, and I'm not talking about them pop-up ones during the pandemic, okay? FYI, I was not a pop-up credit repair expert. I was a credit repair expert before the pandemic, okay? But during the pandemic, everybody and their mom was a tax preparer or a fucking credit repair expert. I'm not talking about them. But if you notice, like the people that were in it and they were popular and well known, they left the game, or they do other stuff, or they're credit consultants, things like that. Okay. So the industry is changing drastically, and we're relying on them for these changes, and you got to stop doing it. You got to stop doing it. Just understand it's not as simple as you think it is. A lot of my clients who aren't getting approved for mortgages and desperately need a house, they're like, fuck it, I'll just rent an apartment. They think it's as simple as just walking in and saying, hey, I need an apartment. Nah, because now these rental companies, they want the same thing that the mortgage companies want. They want to see your bank statements. They want to know how long you've been in business and how long you've worked for a certain company, whatever. They want the same thing. And they're also going to look at your Vantage 4.0. And you need to be aware this is what it looks like now. Your FICO 10. So she was like poor. She went from poor, right, for the FICO score 8 to the new version. She went from poor to hell. That's where she went, thanks to FICO 10. Okay, and FICO 10C. I'm actually going to show you someone else with a higher credit score. But the thing is, her credit score is mad high. But when I actually, let me see if I can find her. When I actually go and hmm, I forgot I forgot her login, but bear with me. But when you actually see the differences, like how I went through that one client, how I went through everything, when you look at each of her scoring models, even though her score is so high, you can see a slight change in each with each model number. And to me, again, I'm not one to talk about what is and isn't fair. I really hate that word. Like it's, to me, it's corny. Life isn't fair, right? Like we all got a story, we all got, some stresses in life, things that we can and can't handle. I get it, right? But the reality is it's not fair. It's not fair. No one asked for this type of situation. No one asked for these models. You didn't even know it was out here. You don't know the differences between these models, so on and so forth. Let me see if I can find, I'm trying to find no, I can't use her. Just rock out with me. I'm trying to find, it's one of my newer clients. She maybe she canceled it because her score was so high. Let me see. Okay, boom. Found her. All right. So let me share my screen with y'all. And again, in between time, I would just like to say be sure to like, comment, subscribe. I am not on the platform that you guys are seeing me on. Okay. So be sure to check out StreamYard. If you want to comment and show your name, if not, I'm gonna still see your comment and just say Facebook user or Instagram user or whatever the hell. Okay. But yeah, so this is my other client. This is my newest client, my latest client. Okay. This is her credit score. This is her FICO score 8. Her FICO score 8. As you can see, she's in the 700s with Equifax, which is like wow, because it's Equifax, TransUnion and Experian. Okay, FICO score 8. The FICO score 8 is different. It's a consumer score. You can have a lot of collections and shit on there. They're forgiving. It's all good. It will get better over time, right? But let's take a look at her mortgage score. It's slightly lower, right? No, actually, it's good. Here, let me see. 721, 700, let me see. Yep, it went up. Her Experian went up, and then let me see. Yep, it went up. So, okay, so she's good. She's good. If you actually take a look at her credit overall, the most negative thing on her credit report is her utilization. Once she pays that down, she'll be golden. She'll be an 800 club for sure. For sure. And her and I already talked about that. But anyway, now let's look at her FICO 10 and FICO 10T. And if it sounds like I'm screaming at y'all, I'm sorry. I'm so sorry. But yeah, it went down a bit. You see that? And this is just the FICO 10, the regular FICO 10. It went down a bit. I'm just trying to show y'all two extremes. All right, let's look at our FICO 10T. Went down a bit. Went down a little bit. Okay. The thing is, in this particular situation, this client doesn't have really anything negative, but it's almost like they're trying to find something negative, right? That's the vibe I'm getting off of here. Why is her score just changing drastically? Look, her FICO bank card score 10. Now she's in the 600s. We saw her credit, we saw her overall credit profile. Why would they do that? Why would they do that? You know? So I'm telling y'all this again because I need you to be aware. I need you to have your eyes open and just be aware when you're going to apply for things that if you're denied, this is why. Okay. We're going to get Sean back on. I'll ask him to talk about it, to discuss it with y'all. And maybe there's some sort of explanation. Now, let me give some sort of solution. As far as the best line of defense that I could offer you guys would be this. Okay. Got her credit looking straight. Actually, no, with all due respect, she actually came with pretty decent credit. I have to fix certain things that on her credit report. So, but she actually already came to me with good credit. And yeah, I have to do other things on her credit report. Yeah, but yeah, I do get people those scores, by the way, just so you're aware. But yeah, so the best way the best suggestion I have for y'all is to ask questions. So if you are trying to apply for, again, this is the mortgage episode, you're trying to apply for a mortgage. Some of y'all are coming to me already with a mortgage lender that you got from your homies and them, or your girlfriend just got her mortgage license or whatever. You know, this is a judgment-free zone. I'm not judging y'all, whatever. I wish y'all the best of luck. But ask questions. Ask them, what scoring model are you looking at? Are you looking at FICO or are you looking at Vantage? Which Vantage score are you looking at? The 3.0 or the 4.0, right? Ask questions. And if they're saying to you, oh, well, we're looking at classic, you're golden. You're golden. You could go ahead and rock out with them. You understand? But if they're sitting here talking about, oh yeah, we look at FICO 10 and FICO 10C, I wouldn't go with them. That's just my suggestion. Do what you feel is best. So first and first, mostly know your credit report like you know yourself. Okay. Again, check me out on YouTube, fixmycreditnow850.com, Tamaya Robles at FMCN850, whatever. I have a ton of YouTube videos. Even if you go on my website, fixmycreditnow850.com. My website name is the actual name of my business. I have free videos where it's walking you through how to read your credit report. So there's no excuses. Get on the bandwagon now before you can't do anything about your credit. Understand your credit, know your credit report. Then, if you're trying to purchase a home, in my opinion, do a little bit of research on the lenders that you're dealing with. A lot of them don't know what the fuck you're talking about. If you're like, yeah, so do you run the 10T or not? And they're like, what's a 10T? Then you probably don't have the best mortgage possible. And it's not, and excuse me, y'all, I got my TT wig on, and she likes to do her own thing. So don't do not judge me. Just listen to the information. But anyway, or and not to put too much pressure on the lenders, right? But if the lender doesn't know, they will, if they're a good lender, they'll find out for you. You understand? Because a lot of times it's the underwriter that is running your credit report, and well, it's the mortgage lender running it, but the approvals and stuff goes through the underwriter, and maybe the underwriter that they use knows. Again, I'm not a mortgage lender, but I've been doing this for a while, and I've been dealing with Sean for a while. Okay, so I kind of have some idea. So there's that. Also, again, if the lender does use the FICO 10 and the FICO 10T, I hate to tell you, it's nothing personal, but don't fuck with them. Don't fuck with them unless you know for a fact that you have a very high credit score. Go to myfico.com, pay the money. It's an investment in yourself. If you guys keep complaining about fees and prices and how much this costs and credit repair costs this and I got to pay, then you're not ready to buy a house anyway. Like, just be real with yourself. If you're going to nickel and dime and all this other shit, don't even have a conversation with me or anybody else until you get your bread up. And that's just facts. Okay. If you are complaining about the rent that you're paying now, and that's why you need a house because the mortgage is cheaper, which is facts. And I'm going to tell you another thing, you don't pay a mortgage for the first 60 days anyway, but I digress. But you're complaining about how you have to pay my FICO $29 to get the real, then you're not ready for a home. You're not ready. Okay. But those that are ready, those that who are serious, go look at your my FICO, see what the lenders are seeing before they start running your credit report. This is a soft pull when you go to Smart Credit, when you go to myfico.com. Okay. It's not hurting your credit score, but when you go to the lender and they're checking, you don't want them to check and see where you're at, right? You want to know where you're at already before you apply for a mortgage. That's period. Okay. So know your credit report as soon, like you know yourself. All right. Now, I always tell people, rule of thumb, I'm not expecting y'all to be credit repair experts or anything like that, right? But what I like to say is if you're looking at a credit report, pay attention to colors. Pay attention to colors. Matter of fact, I'm gonna pull up a credit report right now, and I'll give you an example. Okay. Again, I tried to log into somebody's who forgot to pay. Okay, like, give me a second, I got y'all. So, for example, I do not expect y'all to be it's so funny. I have so many credit reports in my what you call it. Okay, there's okay, so for example, let me stay focused. There I don't expect y'all to be credit repair experts, okay? But you can take a look at your credit report and just eyeball it to see if you have a lot of negatives or a lot of positives, if there's more positives than negatives, and so on and so forth, what to do, right? If you're seeing too many colors, then more than likely you need your credit repaired. There is no need to apply for a mortgage. And bear with me, y'all. I'm trying to find, and I'm gonna do this pretty quickly, but I'm trying to find a credit report, a smart credit report that shows a Vantage score, right? Bear with me. Actually, I got one right here for you. All right, hold up. I'm trying to be respectful of people's privacy and making sure I'm showing an active credit report. Okay, boom. So I'm in. Give me a second. They want me to be triple in and verify myself. Can't use hers. Hold on. Some of my clients are just mad colorful. So I'm in people's credit reports and then they turn it off and I gotta turn it back on. And it's just wow. Hold on. I got okay, here's a good one. Dear God, I hope his smart credit is on. Actually, this is a new client of mine. I'm not going to say his name, but he just started with me 30 days ago, and I updated his credit report the other day, and his score jumped between 80 and 100 points across the board, right? And I told him about it and I'm like, "Yeah, congratulations." And he doesn't respond. So like he's one of those clients that are just like, "Listen, just let me know when you're done." I'm saying like He's not paying attention to shit, but he pays me on time. And the check clears and I get the results, so it's whatever. So anyway, he started off pretty low. His score was lower than this, believe it or not, and it did jump, so it's pretty bad. But colors, just look at the colors. You know what I mean? So if it's blank, you have nothing to worry about. It means it's unknown, it wasn't reported, and this is a smart credit report. I'm trying to see if I can show you. No, I can't show you that it's a Vantage score without showing you his personal information. So this is a Vantage 3.0. So even Smart Credit has not updated to 4.0 yet. They do have a 4.0 option, and they also do have a FICO option for only one credit bureau, but that's not helping. One credit bureau is not helping anybody, right? Now, if you see a lot of green on the credit report, you're golden, you're current, you're up to date, cool, no worries. But once you start seeing these colors, then you know you need some credit repair action. Okay. Now, this is even includes if you have an identity IQ credit report. I'll show you that. Okay. I'll show you identity IQ. I hate identity IQ with a deep rooted passion. However, it's still the same information, and you just need to know where you stand. Are you on the more positive side? Or are you on the negative side? Does it look like, you need a lot to fix or whatever? So in this case, look at that. Perfect. This is perfect up until here. Now, when it comes to mortgages, one thing I do know for a fact is that you have to, um, if they're looking at the past 2 years, that's what with Sean. I know that as a mortgage lender with him, anything within the past 24 months is critical. Okay. So that's missed payments. Any recent missed payments is going to be detrimental to your credit score. Okay. So these missed payments, like his, I'm already disputing, don't worry, but they need to be flipped. It needs to either be current or this whole account needs to be deleted, but it has too many positives, right? So I'm not trying to delete anything with positives, right? So again, this is a new client of mine, and I do know what his situation is. As you can see, he has recent missed payments, but if you're looking through, look at that. A lot of his stuff is in the green. So if you see a score that's low, and then you're going through your credit report and you're seeing a lot of colors, then you know you need credit repair. Like real talk. And if you know you need to pay down your credit cards, that's another sign, right? But he has a lot of green. A lot of green means go, right? But he has recent missed payments, and that's why his score is low. So that's what I'm trying to tell y'all. Like, first line of defense is check your credit report. Okay. Look at it. Are you seeing reds and blacks? And I'm saying, are you seeing that? Because if you listen, I see collections and how smart credit is set up. You can actually scroll all the way to the bottom, and that's where they put their collections and charge off. So he has like, this is a collection here. It's showing a balance of over 2,000. Now, I'm not in anybody's pockets. Me personally, I do not ask my clients what their income is, what their debt to income ratio and all that stuff is, because I'm not a mortgage lender. I don't need to know that. However, if you do come to me and you're trying to get a crib and you haven't spoken to Sean, or you haven't spoken to another lender, I am so used to looking at credit reports. If I see like high balances or whatever, I'm gonna tell you like, yo, you're gonna have to get this off before you even go to a lender, because a lender is going to tell you somebody needs to take this off. So you don't want to be ping pong back and forth when you could just look at your own damn credit report and be like, oh, it's too many colors. Somebody said, if I'm seeing all these colors, I gotta get my credit repaired. Now I will show, if you're into the identity IQ, let me show you identity IQ. So I'm trying to show y'all a lot of dear God, I forgot I have to use stinking social security number. I'm trying to tell you, I hate identity IQ so hard. It's not even funny. It's not even funny. I can't stand identity IQ. But I know some people are like loyal to identity IQ for whatever reason. I don't know why. I'm loyal to smart credit, so I get it to a certain degree. Let me share identity IQ with y'all, just so you can see this person's credit report. All right. So we're going to look at, actually, I'm about to show their personal information. Hold on for a second. Let me not show their personal information. Uno momento, por favor. All right, cool. So I'm bypassing their personal information. So now I can share with y'all. All right, cool. Boom. All right. So I'm mad loyal to Smart Credit. I've been with Smart Credit since I started this business. The reason why I like Smart Credit so much is it's an easy read. I've had clients try to read an identity IQ credit report, and they're telling me weird shit. And then when I'm like, listen, I know you're with Identity IQ, but you're with me now, so you got to sign up with Smart Credit. Here's my link or whatever. FYI, it's in the description. Get your credit report for $1.99, people. Just look at your credit report. It's $1.99 for 7 days. Before that 7 days hits, and if you don't want my services, just cancel. But at least you can look at your credit report. It's a perfect read. I love how Smart Credit reads. I can't stand how Identity IQ reads. But anyway, it's still a credit report. So this is what it looks like. Okay. You see, green means go. It's the same concept, right? But if you look at July 2023, it's this is supposed to be orange. Okay. That means they were late. I told you, mortgage lenders, they look at the last 24 months. Now we're seeing colors. We're seeing went from green to this color, 30 days, 60 days, instantly a repo. This is a repo. This is a repo. Tell me I'm lying. Tell me I'm lying. Repo. They're not even saying it. What is this? So auto loan, boom. Boom. It's fucking repo. And I'm the queen of removing repos, y'all. So if you need your repo removed, definitely hit me up. Like, I already told y'all my recent story when the tow truck driver stole my car, and I wasn't going to pay them people. What I look like? It's stolen. Yes, I understand. I got a loan from y'all, and it's not your fault that my car got stolen. But I'll be damned if I'm gonna be paying on a stolen car. So they didn't want to do anything about it. I'm not paying my loan. What do you think happened? They put it in they put it as a repo status, which was bullshit. But anyway, I got it right off the next month. But anywho, I digress. Pay attention to the colors. You see, this is actually mad old. So they're showing you the colors. This is in collections or charge offs, right? This is in collect. What is this? This is a charge off because it's with the original creditor, Verizon. Verizon is a thorn in my ass. Me and Verizon have a deep rooted hatred for each other that goes way back. I want to say a strong 8 years, but I get them bad boys off. Okay. They play no games with me. But yeah, so again, I'm saying this lightheartedly because this is a touchy subject. This is something serious. This FICO 10T, I'm telling y'all, it's the beginning of the end. It's the beginning of the end for credit repair. It's a beginning of the end. Y'all can't get approved for shit like y'all used to get approved for shit, right? That's because they're going back in time. So here's my thing. When during the pandemic, when people they noticed that people were starting to fix their own credit and getting loans, and it's on site with Verizon. You dig me? You dig me? Oh, oh, when I see Verizon, I'm like, son, you know what I'm saying? I get mad. Philly, like, I hate. Oh my gosh. Let me tell you real quick since y'all are listening, right? The reason why I hate Verizon is because it's a short story. Okay. I left Philly. I met my soon-to-be ex-husband, my soon-to-be future ex-husband. I don't know how to word the story, right? So I moved to Jersey with him, and then we lived in the hood, which is going backwards for me, but whatever. We lived in the hood. In this, we lived on the first floor, and then on the third floor, it was this mad, angry, bitter bitch, right? She was just the demon neighbor. But we didn't talk to neighbors like that or whatever. So it's like, cool, whatever. And one day I got something in the mail from Verizon talking about I owe them like a couple $100. I'm like, we don't have Verizon. We were using something else. So I'm like, where did this come from? Blah, blah, blah. Come to find out my neighbor, the angry bitch on the third floor, she would break into our mailbox with a lock on it, and she stole our mail, and then she applied for Verizon. This bitch had a phone, a house line. She had the internet and cable in our names, right? In particular, I'm sorry, my name, my name. Okay. So I didn't know all of that. I knew she stole our mail, but I didn't know like the Verizon thing until we moved and we were thinking about getting a house at that time. And mind you, I was so ignorant. Like I was mad ghetto, mad ignorant. I didn't know anything about credit. I went to Lexington Law, like everybody else, paid them $5 million for them to freaking move one inquiry in the course of 2 years. Trust me. Whatever y'all been through, I've been through it as well for the most part. You know what I'm saying? I've had everything on my credit report except bankruptcy and child support. You know what I'm saying? And a student loan. Real talk, I wish I did have a student loan because man, knowing what I know now, I wish I had like a $600,000 student loan. I pay $1 a month for the rest of my fucking life. Anywho, so I went to so-called try to get a um a house. They ran my credit and they were like, "Yeah, you owe Verizon $7,000 or something like that." I'm like, "What? I ain't never had a Verizon." So I called Verizon and yo, mad. This is real talk. I was on the phone with Verizon for I want to say 4 hours. They kept transferring me to different people. I'm like, this isn't me. This isn't me. I never had Verizon. Like, matter of fact, tell me when y'all came to my house and install. Because this is back in the day. I don't know how they do it now. This is back in the day when they would have to physically come into your home and install your line and all this, that, and the third, right? So I said, do me a favor. Tell me when I let y'all in my house. Tell me when y'all actually installed this shit. They couldn't tell me. They kept telling me about the chick on the third floor. I was like, we never lived on the third floor. Anywho, so the thing is they never wanted to remove it, and I didn't know much, so I called Lexington Law. I was with Lexington Law for fucking 2 years. Honest to God, I must have paid them thousands of dollars. Like I didn't know better, and then nothing was removed, but maybe like an inquiry or something like that. And then it just stayed on there until finally, over the years, time went on. I became a credit repair expert. I want to say like 4 years later, 5 years later. After that, that shit was still on there. So that whole we'll wait 7 years and it'll drop shit, that doesn't work because one of the things they do is they re-age it. Don't get me started. I know this is about a mortgage and not about credit, but I digress. I hate Verizon with a deep rooted passion. Like, eat them. But anyway, I digress. I'm sorry. I've been rapping for a while, y'all. I apologize. You know, I'm passionate about this. I'm big on credit education. Again, be sure to like, comment, subscribe, all that shit. I got to remember to say that. Check out my podcast, you know what I'm saying? And for more information. But for real, I'm really sorry on behalf of the Credit Bureau, the CFPB, the FCRAs, the FTCs, and all that this is happening. This is real life. I'm going to have Sean address it. Matter of fact, since the next segment isn't until next Sunday, I'm going to talk to Sean like to probably tomorrow, and I'll say, hey, check out this article, and can you let us know like what's good, like what do you think? So at least you hear from a professional, from a mortgage lender. Okay, if you're trying to get a home, people, uh, get your credit repaired. Come to fixmycreditnow850.com because y'all know me. Y'all can follow me. If you don't want to go to me, fine. Fix your credit. First line of defense, go look at your credit report. Look at them colors. If you're seeing too many colors, too many reds, too many blacks, too many yellows, too many oranges, you know you have to get your credit repaired. There's no need to apply for a mortgage because you got to get rid of them. You got to get rid of them. Okay? Get rid of them and then worry about your credit score last. I'm trying to tell you, nobody gives a fuck about your credit score right now. It's about your credit profile. You know what? I'll do a whole segment later, okay? Another time about your credit profile because y'all are still stuck on your credit score, credit score. Times have changed, okay? It's not about your credit score. There's people that are getting approved for loans and credit cards, $50,000 credit cards from Navy Federal, and they got a low to moderate credit score. And then the guy that has an 800 credit score can't get a credit card from Navy Federal or anybody else because it's their credit profile. Boom. It's a credit profile. All right. Fuck them credit scores. Worry about that last. Go to Smart Credit. Go look at the link down there. Okay. I have a Smart Credit link. You'll see my logo. It's $1.99 for 7 days. Let me tell you this ignorant shit that happened today. No, I'm sorry, not today. Earlier this week. Now, I can't want this more than y'all. I talked to y'all about this already. I can't want better for you and your family, and I can't want to break your generational curses for you. But $1.99 though? All right, real quick. So I'm advertising on Facebook as I have been doing for the past 10 years. Nothing new. Nothing new, right? Okay, cool. So this one guy, he sets up a consultation with me and he was like, hey, yeah, I need my credit fixed. And, I used to be at an 800, blah, 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 blah. I'm like, great, 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 great. I need to look at your credit report. Ooh, yeah. How much is that going to be? It's $1.99 just for 7 days. If you hire me, then it will be regular price. If not, just cancel. It's just $1.99. But for the sake of me looking at your credit report and doing an actual consultation, I need you to pay that $1.99, right? Oh, sis, I ain't got it right now. I ain't got it. I ain't said, bruh. I said, I just all professionalism went out the door when this motherfucker sat here and said he can't pay $1.99 for me to look at his credit report. And I was like, sir, get at me when you're serious. You have a good day then. But bye now. And I just hung the fuck up. I ain't got time for that shit. So I say that as we know, because y'all been following me, right? Don't schedule a consultation with me if you just want to know if I'm real. I'm real. This is alive. Y'all been in and out for over an hour with me. Okay. You can Google me. I'm real. You can find me. I got Facebook groups. My main join out of my 5 are credit and first time home buyers plugs. You can see my results. You can check me out on YouTube, Instagram, whatever. But only come at me if you're serious. If you are one of two things, it's only 2 times you should be calling me. You need a consultation because you're ready to start and you want to get your credit repaired and you're serious, right? There's one. 2, you are trying to structure a plan and you do have legitimate questions, but you need help structuring your credit plan and you just need some guidance. I'm down for that shit. I'm down for that shit. But when I start talking about how much something costs and you're sitting on child support out the ass, not 1, but 2, but 3, okay, student loans, repos, and you're mad at $1.99 or $30 or whatever the case, I'm going to tell you now, there is no need for you to schedule a free consultation with me. For what? For why? Okay, we're not going to do that. Don't waste my time. Don't waste my other clients' time who actually need my help. Don't waste your breath. Okay. Keep getting free, bro, until you can figure it out. I'm here for those that are trying, that want to do better, and that are understanding that credit repair is not forever. It is literally going down the drain quickly, as we can see. Quickly. So fix your credit before you can. If you're one of them people that are like, I don't need your help, I'm doing myself, perfect. I have, matter of fact, let me show you. Let me go on my website before we log off. Okay, go to fixmycreditnow850.com. Bear with me, and I will show you the DIY section, okay, of my website. Okay, boom. This is my website. It's been looking like this for years. I should probably update it. I'm not. I'm not. I'm too busy. But if you go here and click, boom, you got YouTube podcasts and our DIY store. Okay. Report your rent payments. Now I do have to take that off. I don't do that anymore. But anyway, do DIY store. And there's a ton of DIY stuff. Now, here's some tea. You can actually, you see this right here, delete personal information. One of the first steps of credit repair, especially if you're trying to do it yourself, is to remove all of those names, all of those addresses, all the incorrect, probably birth date and employer from 10, 20 years ago. Get that shit off your credit report. Okay. You just need one name, one address, one date of birth, and one employer, if you even want to tell them employer, because I don't even have an employer on mine. Okay. Because what that does is when it comes to disputing, if you don't do it and you're trying to dispute negative items on your credit report, I'm giving y'all free game. I'm giving y'all free game. Okay. The items on your credit report are from when you applied. So if your name at the time was Jane Doe, and then years later your name is Doe Jane, then when you try to dispute the negative items under Jane Doe, they're going to check and see, is Jane Doe on your credit report? Okay, so that agency reported Jane Doe, even though you're Doe Jane right now, right? So you want to erase all the old names to disassociate yourself with that old debt. And now, I don't know, maybe your name is Mary Jane now. I don't fucking know, but whatever your name is, that's what they have to compare it to. So if Jane Doe is the old debt and the collection and the charge off, and now it's Doe Jane, they can't connect it. They're supposed to remove the negative item from your credit report because they can't verify if this is you or not. It's not on there. So definitely download this personal dispute letter. It's free, and use that, especially for my DIYers. Take care of this step first before you start listening to every YouTube video and following and clicking and liking and trying to call me with a consultation talking about, yeah, I already know what I need to do. You don't know shit. Take the personal information off. Okay. You don't have to be honest about your address. Just make sure it's an address that you're comfortable with them having. Let them figure it out. Now, this is an oldie but goodie, but this is also free. Look at that. $0. $0. You see that? This is the truth about credit repair. It's an old school video. It's an oldie but goodie. It still works. Okay. Go check that out. This is for my DIYers, the ones that's going to call me and challenge me and tell me what they know. All right. Now, the dispute letters, you can get them anywhere. Yes, I know that. You can Google it, you can download it. But can you get a good one? Can you get a good one? Okay. So I give out good dispute letters. I literally use these on my own. And if you're having any issues downloading, anybody can tell you, just email me. I'll give you my whole joint. Like, this is more. I have like over 100. You can have everything from bankruptcies to child support, collections, charge offs, medical, da 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 da. I got you. But real talk, I only use one letter. I don't use any of that anymore. Unless I really need to. But the one letter I have that I created for myself, it's magic. So I get good results. And then boom, here's some little how to 24-hour inquiry removal. How to get these inquiries off in 24 hours. Like, come on, yeah. Come on, yeah. This is for those that think they know everything. And they got it. I'm not mad at you. I want you to get it. Okay. But here's a little help. Here's a little help. I'm a G at what I do. And these are the tools that I use. Okay. First line of defense, fix your credit. All right, let's take this down. We'll eventually call once my business partner is ready. I'm more focused on getting approved for business credit with US Bank. There you go. Approved me for 10,000 on business and 12. That's good, man. Congratulations. At this point, the way the industry is going, and I'm so glad more of my clients, my newbies, yes, you want me to fix your credit. Yes, you guys are trying to get a house, but low key, y'all want that business credit, and I appreciate y'all. Hopefully, it's resonating, because that's the next line of defense, man, of this. The fact that we can't fix our credit anymore is becoming impossible. Get on the business side. Make up a fucking business. I don't care. Don't come to me like, oh, I don't have any business knowledge. It's just me or whatever. It's just me. I create businesses all the time and shit. You know what I'm saying? Like, this is the most successful one, but I can create businesses, you know what I mean? But no, I'm serious. Create a business, get on a business side. You only have one social security number, but you can have a million EIN numbers. Okay. If one business fails, get another EIN number, open up another business, have a corporation, get a trust. Yeah. I mean, put everything in a trust. Y'all don't want this work. Y'all don't want this work. Why? Because you're stuck on, I got a low credit score and I don't want to pay $1.99. Man, fuck out of here. When you're serious, come talk to me. But those that are serious, I really fuck with y'all because you are recognizing that you have a problem. First step, right? In the 12-step program is the first step is admit that you have a problem. Second step is you need to look at your credit report and see exactly what the problem is. Third step is either contact fixmycreditnow@fitty.com or do your credit yourself, fix your credit on your own, and then so on and so forth, right? And then get that bread. Credit, cash is king, but credit is queen. You know how I feel about that. And what did you say? Because I don't want to call and no, you can call me. Call me and say hi. You're my moderator. Like, like the only person that leaves comments until afterwards. And then I get comments. But the real thing is I get phone calls. So that's what's important. Even if you guys aren't commenting, I see the downloads. I see how often you guys are looking at my page, and I appreciate it. And the business is good. Let me say that business is good, but it would be better if a lot of y'all paid attention and took heed to what I'm saying. Don't take it lightly when I'm telling y'all credit repair is becoming obsolete. Don't take it lightly when I'm telling y'all that this mortgage and the financial industry is changing. It's changing. It's forever changing, in my opinion. I think they're penalizing us for the pandemic and so many people becoming successful, but now they're making everything harder, and you got to have a game plan. So let's go ahead and do it. All right, let's do it. Let's do it. Now, again, I held y'all up longer than I have to. I meant to, and I'm so sorry for that. But thank you. Thank you for joining. My hair is going to be different. Like, this TT wig is going to probably be out the door. I don't give a shit. But anyway, I wish you guys the best of luck on your credit journey. You guys have a good one. Real quick, like, comment, share, subscribe, and I'll talk to y'all later. Bye bye.